Debt doesn't destroy limited companies, it's the silence that does. It's delaying the decisions that does. It's hoping next month it gets better does. Most directors think business debt is the problem, but it's not. The real problem is ignoring it and not having a plan. Now, across the UK, there are thousands of businesses who are drowning in VAT arrears, overdue supplier bills, bounce back loans, recovery loans, C-bills, overdrafts, energy debt, rent arrears, and personal guarantees that they thought would never get called in. But debt itself is normal. Most businesses carry some type of debt, even if it is last month's supplier bills. What matters most is how you manage it when cash becomes tight. Now, if you don't take debt seriously early enough, you can lose control of the timeline. Creditors can start to give you pressure. HMRC are more aggressive than ever in 2026. Banks can withdraw support. Staff will get nervous. And suddenly, you're not negotiating anymore. The control's gone. You're surviving. And that's when directors end up in insolvency. And that's where they can face personal liability. I'll tell you about a director I worked with before Christmas, okay? He kept juggling bills to buy time, okay? We've been speaking to him for months. He paid whichever creditor screened the loudest. He used the VAT money to cover wages. He took on personally guaranteed debts that I said, John, please don't take any more of this debt. He overstretched the overdraft. And when he called me again, he says, Chris, HMRC have sent me a letter and said they're going to wind me up in 7 days. I'm like, right. You have got to move now, John. So we put a plan together. We got the cash flows together. We saw that there was a good business in amongst all this, but they needed a bit of pressure taking off. And instead of burying his head in the sand like he had done, we helped him negotiate with HMRC. We helped him set up structured repayment plans with creditors, and this stabilised his cash flow. Now, he rang me up in January. He said, Chris, I wish I had asked for help 3 months earlier. I wish I'd have took your advice back in September. And that's usually the pattern. It's not debt that kills the business. It's the delay that does, and not having a proper plan in place. So let's talk about understanding your debt position, okay? Because you can't manage what you haven't measured. And most directors guess what they owe. I've been there. And they're almost always wrong. I mean, when we have your first call with us, we're going to speak to you and we're going to go, right, give us an idea what the debts are. And you'll give us them and we'll take a note on it. And then when we actually get the age creditor list, the age creditors list is always a lot bigger than what you think it is. And this is what you want to list out clearly for you. Right, all your HMRC problems. VAT, where are you at? Are you up to date with your VAT returns? Are you up to date with your PAYE returns? Are you up to date with your corporation tax? Get your returns in. You're going to get into more trouble not filing returns on time than you are filing returns on time and not paying them. But get all those figures up to date. Where are you with business loans? Do you still have a bounce back loan that's outstanding? Have you got a C-bills? Do you take a recovery loan? Have you got a funding circle, capital on tap, iWalker? Whatever it is, list it down. Find out all your supplier balances and your contractor balances, okay? Get everyone to send a statement in. Have you got any, are you behind with rent arrears? Have you got any service charges for your premises? What about utilities, gas and electric? Where do you stand with staff liabilities, you know, holiday pay, pension contributions? Now, another thing that I want you to check for your personal sanity, have you got any personal guarantees on any suppliers? Have you got any personal guarantees on your lease? Have you got any personal guarantees on loans and credit cards? And where does your director's loan account stand, okay? Because what this does, it gives you a full and honest picture. It's not a hopeful one, okay? Now, for me to get all that information, you either need a good bookkeeper or you need to be able to manage your accounting software, your Sage, your QuickBooks, your Free Agent, whatever it is, okay? Zero. Because if you haven't got that type of information, this is very difficult. Because my belief is once you know what you're dealing with, like you're not looking at it worse than it is, you're not looking at it better than it is, you are looking at it as it is, okay? You have the opportunity to make this debt become manageable. When you don't, it's mental, it's unmanageable, okay? I have spent Like I say, I am not a guy here who's always got things right. Today, I've learnt through pain, right? There were no videos like this when I started off in business, okay? But I just remember waking up in the dead of night with the weight of the world on my shoulders. And, you know, the reason why I was so scared is I didn't know. I thought I knew, okay? And actually going through everything and getting it all down on paper, that's what I like, paper. Got tons of these books, all spreadsheets. I can see it, I can face it, and I can move on. Now, once I've got all that, I need to prioritise debts the right way. And this is where a director can go wrong. They're paying whoever's screaming first, okay? Or whoever scares them. Now, that's not a strategy. You're panicking there. Now, this is where I believe your real priorities should be. You need to be paying your taxes. HMRC are escalating very quickly. There's more enforcement agents out there in 2026 than ever before, and winding up petitions are that they're getting fired off for debt amounts that were unthinkable 18 months ago. So stay ahead of that. Stay ahead of PAYE. When you're getting your invoicing and people pay you, do not spend the VAT. Put the VAT in a separate account. Now, obviously, you need to prioritise staff. Like, if you are late paying someone's wages, that is going to destroy morale and trust immediately. And it's going to force people, they might just walk off the job. Now, you've also got secured lenders. If the bank have supported you, you need to keep that relationship alive because they can withdraw facilities fast. And then you've got to pay critical suppliers. You know, the ones who actually keep the business trading, not the ones who are shouting the loudest. And everyone else, you've got to pick the phone up and organise some structured repayment plans, okay? All of this can be negotiated. Stop overpaying the wrong creditors while you're underpaying the ones that can shut you down, okay? That is how directors lose their businesses. Now, I believe this is really important, and it's speaking to creditors before they chase you. I know a creditor will always respect a director who's communicating early. Silence will create suspicion. And guess what? Most people out there bury their head in the sands. They don't want to speak to somebody with bad news. But if you communicate, that will give you options. And this is how I think you need to approach people. First of all, be honest. Explain the situation briefly. Provide a realistic repayment proposal, okay? Now that bit is important. How do you do that? Well, you've got to have some cash flows. Stop doing it in your own head. This is why I think it's so important to have a good bookkeeper or an accountant who does your bookkeeping so they can help you with things like cash flows so you can understand what it's going to look like going forward. And a basic 13-week rolling cash flow is like a spreadsheet with money that you know has got to go out and money that you think is going to come in. And if it's bad, if you're not sure you're going to get through this, you need to speak to someone like us. In fact, you know what? At the bottom, top of the comment section, there is a link. Click that link. You will be able to speak to one of my team today. Free, no obligation, no strings. And when you're speaking to your creditors, sometimes it's a good idea to tell them that you're taking professional advice, especially with HMRC. If you're insolvent, HMRC wants to know that you're speaking to an insolvency practitioner or an insolvency advisor. Avoid over-promising people because you just want... I mean, I see this a lot with the revenue. HMRC will come, they might be in your office. And you are so desperate to get these out, you'll agree to anything just to get them out of your office. And you know that in 2 months you're going to fail on whatever you've agreed to them and they're going to come back, they're going to take your assets, they're going to wind you up, okay? Please stop making offers of amounts that you can't sustain. Creditors, okay, and I'm generalising here, but I think they prefer a low, consistent payment, okay, than a high payment that's going to fail in 2 months. And again, communicate early, professionally, and calmly. And I'm telling you now, the difference is going to be night and day because most people bury their head in the sands and that forces your creditor to act. Because if the creditor's getting nowhere with you, they can't get hold of you, they're going to ramp it up. Now, most of you is going to owe HMRC. I'm going to tell you now how to negotiate with HMRC. For me, at the moment, they're the most powerful creditor you've got. They are also one of the most structured, predictable creditors if you engage with them early, okay? Lots of you are out there behind on tax. Now, you've got a number of options. You might be behind with VAT, PAYE, corporation tax, all three. You can set a time to pay arrangement up. A time to pay arrangement is where you go to HMRC, make sure all your returns are in, and you say, listen, I need to spread these payments over this amount. Could be 3 months, 6 months, 24 months, 36 months in certain cases, okay? But you need to go to them with cash flows. Again, don't be doing this off your head. I don't mean off your head, I mean off the top of your head, okay? Never ring HMRC off your head. That's not what I'm telling people, okay? But if you go to them and you explain to them why you need this amount of time, and you want to explain to them, say, listen, I've took insolvency advice and I could use liquidation. And in liquidation, HMRC will get very little. But I don't want to do that and I want to offer you this. This will free up cash flow. And if they accept it, it will stop any enforcement. Now you've got to remember that once you set up a net time to pay, you must pay that. If you do not pay that time to pay arrangement, it fails, okay? Dead important, and you've got to keep up to date with your current HMRC as well. Now, you might have penalties from HMRC, and a lot of directors don't know that they can actually challenge things like surcharge and interest if you've got a legitimate reason, okay? Compliance check cooperation is really important. Never ever ignore HMRC letters. Provide records that they ask for quickly, and get some advice, okay? Get some advice. Silence escalates cases, okay? Now HMRC, I don't think they expect perfection, but they want honesty and consistency, and they want engagement. If you do that, you'll avoid most of the problems directors fear. Now, I want to talk to you about improving cash flow. Debt becomes unmanageable when your cash flow collapses, and here are the fastest ways to improve it, okay? Obviously, increase cash coming in. What's your marketing like? What's your sales like? What's your conversion like? Are you tracking this? Are you tracking how much you spend on marketing? How many leads you're getting in? How many leads that you're contacting, okay? Chase people who owe you money aggressively. I mean, I remember doing jobs for people and I was so chuffed that someone actually wanted us to do a job for people that I'm like, oh, I don't want to ring them and ask, I don't want to hound them and harass them for the money. If you've done the job, they're happy with the job, get on the phone and get the money in. Shorten your payment terms as well. You know, I know it's like you might be pressurised into giving 60, 90-day payment terms, but you might not be able to afford it. Get deposits in. You know, don't do loads of work and wait for the money at the end. Or get staged payments, right? That's going to improve your cash flow dramatically. And then you've got the other side of the table and go, right, well, where can I reduce money going out? What, I did it last week, me. I've been paying 200 bloody quid for Grok Premium. I don't use Grok Premium anymore. I've got rid of it. 20 quid to Perplexity. I don't really use Perplexity. I've got rid of it. You know, we had a little add-on for YouTube. We're not using it. Got rid of it. I haven't done it for 6... Now, normally I do this every 3 months, but it's been about 6 months. I'm going through that P&L going, well, what is that payment for? Do I need it? Can I get rid of it? Renegotiate your supplier terms, you know? Have you got any jobs that you just don't make money on? I mean, I remember years ago, we used to charge people for HMRC negotiations, and we still do now on big jobs, right? But like we were charging 500 quid for anything, And then when you looked at how much time it was taking you to do it, you was on about 20 quid a bloody hour, you know. So we stopped doing it. Didn't make us any money. You might need to reduce your drawings as well as a director when things are getting bad, okay? You can't fix debt problems with hope. It's cash flow management that will get you out of the mess. And then obviously, if you've done all this, still not working, still too much month at the end of the money, your business might not be viable. And here's the hard truth, some companies, they can't be saved. That's the reality. You've got to ask yourself, is this business profitable if I deal with the debt? Are customers still buying? Does my model still work? Can I reduce my costs? If I can't, maybe I need to take advice. Is the stress you're going through worth it? Now, if it's not viable, you've still got options, okay? But you've got to do this voluntarily. You don't want one of your creditors to force you through an insolvency process. You might need to look at liquidation. The business is not viable, needs closing down. A liquidation will write off all the unsecured debt. Remember, you're not the company. The limited company is separate to you, the director, and it gives you a fresh slate. You can still start again if you liquidate. You might need to put the business into administration. When you go into administration, there's a wall of protection around the business, and you can then buy the assets of the business, the good parts of the business. If there's something good in your business that's worth saving, maybe administration is the right option. And then you can start again debt-free. Now listen, directors don't get into trouble just because of debt. It's because they try to handle it alone. You've got to take advice. We can help you. We can help you understand what your real exposure is. We can help you negotiate with creditors. We can help you understand what the right option is. But most directors wait too long, and by then the options are gone. Now, how do you manage business debt? Let's sum up. Face it. Get the numbers right. Prioritise correctly. Communicate with creditors. Negotiate with HMRC. Fix cash flow. Where can you cut costs? And if none of that's working, you need to pick the phone up. Because if your business debt is building and you feel overwhelmed, I promise you, if you reach out to my team today, we will help you feel better. We might not make the problem go away, okay? But we'll give you some good advice. Now, if the idea of actually closing your company and starting again appeals to you, I want you to go over there and watch that video around pre-packs. And it's going to tell you how you can liquidate a business and start again legally. Thanks for your time, Chris Worden.